The puppet masters. Billionaire Wall Street investment companies have been purchasing hundreds of thousands of foreclosure and short sale homes over the last few years, and then renting out these homes at exorbitant rates to Americans who often haven't even fully recovered from the recession. Finally, as if these companies weren't making enough money already, they're selling derivative shares of these vast real estate holdings off to eager investors as a way to rake even more money. A home should be a place to live, but to Wall Street, it's become a way to siphon billions of dollars in profits from working and middle-class American families. These are often families whose wages haven't even increased enough to match inflation. Wall Street's bulk buying of properties has created a false scarcity. This false scarcity has resulted in home buyers across America being constantly plagued by record low inventory. People getting in bidding wars just trying to find a house, because they're one of the fortunate few that still has a job and actually can afford a house. I call this an artificial scarcity because Wall Street investors are causing new and unrealistic competition in the residential housing market. In addition to the buyers who actually want to own a house as a place to live, crazy I know, we're seeing investors getting locked in bidding wars over who will win the right to add a given home to their thousands of homes already in inventory. This means that there are much more quote-unquote buyers in the housing market right now than there are private parties who can actually afford or want to live in a home in a given area as a place to live. Investors are fueling these steep price increases. The increased competition brought on by these institutional Wall Street-backed investors has resulted in home prices in many areas rising quite substantially. And, a lot of people would say, hey, that's a good thing, right? I mean, the recession, home prices fell, now home prices are rising. What's the bad news? Perhaps it's not good news. Because household incomes are largely stagnant and unemployment remains high. Have wages gone up 10 to 15% in the last few years? No. So how can a slowly improving economy support fast increasing prices? It just can't. A nation of tenants with the bank as their landlord. This is a direct quote. This is an article from the New York Times. A wave of acquisitions by companies backed by Wall Street money is changing as institutional buyers now focus more on expanding their operations to manage tens of thousands of homes across the United States. Basically, Wall Street has collectively become the largest single landlord in the country and is using this monopoly to increase profits by squeezing middle-class families for ever-increasing rent payments. Brought to you by the brilliant minds that made billions of dollars by throwing our country into the last Great Recession. Which brings us to the lopsided recovery. Surprise, surprise, there's certain states, certain areas that experienced the lion's share of all of the nation's home price increases in the last few years. I wonder what could be behind those price gains. Could it be that these areas are experiencing double-digit economic growth in terms of wages increased, manufacturing increasing, or technology? Spoiler alert, it's not that. Institutional, widespread home buying on a scale of hundreds of thousands of residential properties is what's behind the price increases. The areas that are experiencing this high inflation, I'll call it, of home prices are those same areas where corporate, systematic bulk buying of thousands of foreclosure and short sale houses is at its most epidemic levels. And that's not a coincidence. In the years 2011-2012, institutional corporate buyers purchased 387,000 homes in the United States. And while the pace may have slowed somewhat, Wall Street is still on the fast track to owning 500,000 American homes, which they're now using to charge countless American families inflated rents. The bottom line is this, and this is a direct quote from the Wall Street Journal article. Fundamentals aren't keeping pace with gains. In plain English, This means that wages in the economy can't keep up with these ballooning home prices. America, we're not in this together. On the one hand, you have banks foreclosing on hundreds of thousands of hardworking American families. While on the other hand, you have Wall Street-backed mega companies forming huge monopolies by outbidding families that can actually afford to buy a house just because they have the audacious desire to live in a home that they actually own and purchased at a fair price. So we're not in this together. So where are these billions in profits going? Well, for one thing, ultra-wealthy areas like New York and parts of Florida are seeing over half of their home sales in cold, hard cash. Thanks for watching. It's time to tell our elected officials to stop these predatory, harmful practices before our nation falls back into a housing bubble 2.0 that could possibly even be worse than the first. This is Richard Lockwood, real estate broker with Oregon Realty Company, and I'm just asking everybody just to let's get back to reality. Wages, home prices, and everything. They're just not in sync. And there's still time to stop it. Home prices have gone up substantially, and if we can tell our elected officials and that we have a good chance of stopping this before we do go into a new housing bubble. But if history is our guide to the future, then that might not happen. If you'd like to see the full version of this article in a lot more detail, feel free to visit our website, exclusiveportlandrealestate.com. And if you're in the Portland area and need help with a short sale, or would like to get a good deal on a foreclosure or a short sale property as a buyer, give us a call at 503-473-8001. Thanks for watching.